One of the first things that comes up the moment that you start talking about an assisted living community or like a skilled nursing home is how do you pay for it? And if you talk to anyone who works in one of these places, they're going to ask you, well, do you have long term care insurance? And it turns out that not a lot of people actually do have long term care insurance, which is a real bummer when it comes time to pay for assisted living or like skilled nursing or in home care services, anything like that. And a lot of people don't really know very much at all about long term care insurance, but they say that, all of us, if we're lucky enough to live long enough, are probably looking at needing some kind of long term care like this. And so it is important to at least consider and investigate long term care insurance. So I am very pleased to bring you a presentation done by Skip Frenzel with Agape Long-Term Care, and he actually sells long-term care insurance. So this is a very informational presentation that Skip has provided, and I do suggest that you pay attention and take some notes. If you do have any questions about long-term care insurance before or after watching this presentation, by all means, reach out to Skip and he'll be happy to talk to you. His phone number is right here at the bottom of the screen. So again, any questions about long-term care insurance, give Skip a call. All right, without further ado, here is Skip's presentation on long-term care insurance.
Hello, everybody. We're going to be talking about long-term care insurance right now. This is a recording so that I'll be posting it on the Senior Real Estate Specialist website. My name is Skip Frenzel. I'm the owner and operator of both Agape Real Estate and Agape Long-Term Care. I've been a realtor since '77, so I'm an emeritus, and I teach the Senior Real Estate Specialist designation course. And I started both Agape Real Estate and Agape Long-Term Care in 2008. But I'm also a certified financial planner. I got the designation in 1992, along with my Series 7 and 63 securities license and the life insurance license, where I'm also able to sell long-term care insurance. I specialize in working with the aging population, and I belong to several professional, both real estate and long-term care associations, trade guilds, and organizations. I'm a problem solver, not a product salesman. And I'm basically doing this because I went through this with my mother. So this is kind of a pay it forward situation. So we're living longer than ever, but because we're experiencing more health problems. This requires special care and housing, and that care and housing costs money. Someone has to pay for the care and the housing, but who? Well, one of my goals is to work to get the people to prepare for the future events that will happen to them, and I encourage this planning in many aspects of life. Catastrophic health events can wipe out not only a client's savings, retirements, and assets, but also his home if his resources won't cover the cost. And it's not only him that is being affected, but the family too. Not only do they have to care for him, but they have to pay for that care too. That's kind of hard if the breadwinner isn't working. So it really boils down to two questions that, if answered correctly, their long-term care issue is solved. If a bus hit you today, who would take care of you and how would you pay for it? Most people haven't planned for long-term care events, and these events could drastically and suddenly change their lives and the lives of their families and loved ones. But the consequences to the family could be devastating if no planning is done. There's much understanding and lack of knowledge concerning long-term care insurance, and I'm going to try to clear that up for you. But before we begin, we have to define some terms and explain some things to you. People confuse long-term care and long-term care insurance. They are not the same. Long-term care is money, and that's all. It's used to pay for long-term care. But long-term care is medical, social, personal, supportive, housing, preventive, diagnostic, therapeutic, rehabilitative, and maintenance. There's there are several definitions for long-term care. One of the simpler ones that I like to use is that the continuum of care, housing, and services that people are going to likely need when they live a long life. It focuses on that impact of needing the care and what it will have on the individual and the family and for retirement. It's about the ability to function. So based on this definition, how many of you have ever used long-term care services before? Well, all of you have. Think about it. When you were a baby, you needed somebody to take care of you. You couldn't do it yourself. So functioning is made up of one's cognition and mobility impairments and chronic conditions. Long-term care is necessary because a sudden illness or an accident or in response to slow progression of chronic conditions. Some of these include AIDS, auto accidents, farm accidents, sporting accidents, MS, ALS, Lou Gehrig's disease, stroke, arthritis, Parkinson's disease, returning injured war veterans, and much more. While the elderly experience more acute problems primarily from chronic and degenerative diseases, the younger kids experiencing from things more like accidents and even AIDS. 46% of people receiving long-term care services are under the age of 65. Think of these people, the celebrities that have needed long-term care. Christopher Reeves, Ronald Reagan, Michael J. Fox, Annette Funicello, Terry Garr, Montel Williams, Stephen Hawking, Mr. T, Muhammad Ali, Richard Pryor, Charleston Heston, Charlton Heston, Dr. Spock, and Glenn Campbell. And of course, now we have President Carter on the list too. Long-term care involves care, not cure. Medical insurance is for people that are sick or injured, while long-term care insurance is for people that can't function. An example is falling and frailty. These are not medical conditions. They cannot be detected and can be treated. There's no medication, therapy, or procedure to cure them. So the key to long-term care is functioning. They involve the ability to do what we call activities of daily living, or ADLs. What are ADLs? Well, most of you are probably like me this morning when the alarm went off and you smashed it off, you sat up and swung around, got up, walked to the bathroom, scratching things as we went by, used the toilet, showered, dressed. Some of you went downstairs, made coffee, got breakfast, went back upstairs, brushed your teeth, went back down, got your stuff, left the house, and drove to work. These are all activities of daily living. They include bathing, dressing, toileting, continence, transferring, ambulating, and eating. Excuse me. Ambulating is not always considered an ADL, but the others are. And then there's another group called the instrumental activities of daily living, or IADLs. And these happen to be manage your money, using the phone, meal preparation, medication management, doing heavy and housework and shopping for personal items, and doing light housework. ADLs fall into two categories, scheduled and on demand. Bathing and dressing are scheduled while the others are on demand. And the acute problems are the medical, sudden patient is expected to fully recover, let's say like a broken arm. Physical is treatable, but generally not curable, like diabetes. And cognitive is loss of memory, orientation, and reasoning capacity. It's cognitive impairment. And this, about 7% of the problems are acute, while 93% is physical and cognitive. The services involve medical for acute care, environmental for ADLs, and I'll get that, personal for ADLs and environmental for IDLs. Now, the children might get stuck with being caregivers. Caregiving is also a consideration, a part of the senior lifestyle. Caregiving's hard work. Nobody wants to be a caregiver. They do it as an act of love. I've never heard a 7-year-old, when asked what they want to do when they grow up, say, I want to be a caregiver for my parents. And there are no schools, adult education courses, classes, college courses, or anything that teach us to be caregivers. Caregivers, now read adult children here, may have their lives abruptly and drastically interrupted by a catastrophic healthcare issue for which neither they nor their parents are prepared. Often the caregiver faces the inevitable twin emotions of guilt and depression which accompanies such event. Let's face it, Americans are in denial regarding aging. We just don't deal with it. But the decisions that a child will have to make for the parents at a time of much stress, emotion, and unexpected problems are critical not only to the parent's life, but to the child caregivers too. Remember, it's seldom the person needing the care that suffers the most. They're going to get the care no matter what. But the caregiver is the one who really suffers the most. The idea is to manage the care, not provide it. And the loved one's physical or mental decline can either come as a gradual, slow process or an urgent emergency that must be handled immediately. Either way, the caregiver must have a plan for caregiving. This requires foresight and thought. Make sure that their affairs are in order. This can include estate planning, insurance, finances, retirement, legal, take inventory of their estate, determine where they will live. Most people want to age in their home, called aging in place, but have the caregiver educate themselves on the caregiving process and what they're going to need to in that particular case. So the question really isn't who will provide the care, but what will the care do to the family? It may make the caregiver sick, and it tends to tear families apart because the responsibilities are not shared equally. And the children don't want to take care of their parents, but they will because it's the right thing to do. Then there's the case of the 60-year-old child. 49% of 60-year-olds have at least one parent alive. The sandwich generation, in fact, is a club sandwich here. Now, caregiving, as I mentioned, is all about love. If you love somebody, you're going to be concerned about their security, well-being, their comfort, their future, and their safety. Since it is all about love, the caregiver typically wants to do everything themselves for the loved ones. Many times this is overwhelming. They even pay for the loved one's obligations themselves. They sacrifice their own lives to help them. They give up their time, their careers, their families, even their own health to take care of the person that they love. Many times the caregivers, the children especially, since they cannot take care of their parents, will pay for a long-term care insurance policy or for the care and services directly. It's easier for them than doing the caregiving, especially if they don't live by. Now, caregiving affects one's ability to function, and the more the inability to function, the more caregiving is needed. This chart kind of represents what we're talking about, the general areas going across the top. We have in the home and in the community, and going vertically, we have both formal and informal. So we have formal home, formal community, informal home, informal community. Now, it turns out the types of care are informal and they would be custodial, non-medical, volunteer, not skilled, and not paid for. A family member could actually do this. While formal care is paid for, it's chronic, medical, requires trained personnel, skilled care. It definitely is paid, and it's used to solve acute problems. So now let's get to long-term care insurance. Well, insurance is really nothing more than a bet between the policyholder and the insurance company that an event will or will not happen. The policyholder bets that it will happen, and the insurance company bets that it will not. So if you buy car insurance, you're betting that you're going to crash the car and collect the money, while the company bets that you won't, and they get to keep all your money that you paid them in premiums. Not much more technical than gambling in Vegas. But insurance is really about controlling risk. If you think that an event will happen or is likely to happen, you want to mitigate the risk for that event. And the premium to cover the event depends on the statistical likelihood of that event happening and the potential of the loss. So insurance really is a form of planning. Consider that most house fires would happen about 1 in 1,200. Auto accidents where the car is totaled happens about 1 in 240. But looky here, a long-term care event worth 2.5 years in a nursing home, 1 in 3. So you see that the likelihood of long-term care event happening is much greater than many of these other things. And it's important, the types of insurance, that the coverage that you need. Everybody needs health insurance, then disability income if you're working, life insurance if you have a family, and then long-term care insurance. Well, what are we talking about for the cost of care? Well, the national average for a private room in a nursing home, $108,000, semi-private's $95,000. One bedroom in assisted living is about $54,000. Home health care is about $61,000, and homemaker and companion services is $59,000, and adult daycare is $20,000 or so. This comes from the annual Genworth Cost of Care surveys. It's done every year. This is 2023 right now, and the most recent is this 2021 cost. But you see the link on there. You can find out state by state and local cities and so forth. I'll repeat this at the end of the presentation. Residential care facilities can be 100 to 160 a day, living companion about $275 a day or higher if they have health care, medical training. A nurse just to visit your home is about 150, and a social worker is about 140. But here in San Jose, where I live, that is much higher than the average. Nursing homes, $187,000 a year, and even a semi-private isn't that much cheaper, 142, and assisted living, 72,000. Home care, Medicare approved, is 85,000, and a homemaker service is $85,000. That's pretty expensive. So here again is the website for the Genworth Cost of Care, and that'll be shown again at the end of the presentation. So who really pays for long-term care? Well, it turns out that in California, Medi-Cal, which is the state version of Medicaid, pays for 47% of all the long-term care, while Medicare is only 18%, but long-term care insurance is only 9%. But get this, the patients and the family members are paying 26%. These are the ones that are really bearing the cost, and it can be pretty expensive to do long-term care. Now, note that Medicare and private health insurance will not cover long-term care. this is probably and you have to be impoverished to get Medicaid. Now, this is probably the biggest long-term care insurance misconception. Long-term care insurance provides money, and that's it. It's only one factor in long-term care. Long-term care insurance is viewed not as a replacement for family care, but as a means for enhancing it. Now, the idea behind long-term care insurance is to give you options. Nursing homes should be your last resort, but unless you have long-term care insurance, you have no choices. Medicare and Medicaid won't cover assisted living, and medical facilities must be approved, and they're not always the best facilities for long-term care. Long-term care insurance brings in a professional and informal caregiving to handle the work that the caregivers find time-consuming, embarrassing, or stressful. They say, I'll take care of mom, but I know you will, and I'll show you a better way to do it. So the triggers to benefit payouts in long-term care insurance have to do with the ADLs and or cognitive impairment. Normally, you need to lose 2 of the ADLs and or have cognitive impairment. Now, some of the maladies for causing ADLs and IADLs, for the older people, it's arthritis, coronary heart disease, visual impairment, stroke, and respiratory conditions. While the younger folks, it's bad back, mental retardation, mental illness, coronary heart, and respiratory. So long-term care insurance generally covers home care, assisted living, adult daycare, respite care, hospice care, nursing home, and Alzheimer's facilities. If home care coverage is purchased, long-term care insurance can pay for the home care often from the first day that it's needed. It will pay for a visiting or live-in caregiver companion, a housekeeper or a therapist, or a private duty nurse up to 7 days a week, 24 hours a day, up to the policy benefit amount. So money just pays for long-term care insurance, but health buys it. The underwriting is getting stricter. 1 in 5 people cannot qualify for long-term care. Long-term care insurance. The uninsurable conditions are that recovery is rare or a cure is not available at this time, or that symptoms are severe and tend to be progressive. But putting off buying long-term care insurance can be a problem because the premiums can increase anywhere from 14 to 22% per year, and the percentage of the people able to pass the underwriting is much less at 70 than, say, 60. And again, 1 in 3 people age 75 to 80 won't qualify for coverage because of health. And you could qualify for preferred rates based on your health. They may need to go to on claim earlier. So in other words, the younger and the healthier you are, the easier it's going to be able to get long-term care insurance. And that's the thing that you want to buy it when you can instead of waiting until it's too late. So a 55-year-old married male, for example, for $100 a day coverage would be about $709, but at 65, it's $1,342. So keep this in mind. Sex, air, toilet paper, and insurance are all the same. You don't appreciate them until you can't get them anymore. So long-term care insurance rates are determined by 8 main factors: a person's age, the daily benefit amount, which is how much it'll pay per day or month, then how long the benefits pay. So the daily benefit amount and the how long it pays times each other gives you your bucket of money. That's how much the policy is worth. The elimination period, which I'm going to cover in a minute, it's like a deductible. inflation protection. As time goes on, the prices of healthcare increase, and the long-term care insurance policy should have an inflation protection for that. General health, as I mentioned, it could be preferred, standard, or substandard. Gender and options. Just like a car, you can get all kinds of whistles and bells for it. Most companies will offer couples and multi-life discounts on individual policies. The average age of the purchasers has dropped from 68 years in 1990 to 61 years in 2005. And the number of purchasers who are under the age of 65 has increased significantly. So people are starting to wake up to this long-term care insurance. Most policies have an elimination period or a waiting period similar to a deductible. This is the period of time for which you pay for the care until before the benefits are paid. The elimination days may be, say, 20 to 120 days, but the higher the elimination period, the lower the premium is going to be. Think of a policy as a bucket of money. The rate at which you use it determines how long it will last. And there are many riders for various features. Now there's hybrid insurance policies too that can buy life insurance or an annuity with long-term care insurance. Basically, this is a life insurance policy with a long-term care rider. You use it as a life insurance policy until you need long-term care, and then it turns into a long-term care insurance policy, and the life insurance portion is gone. This is becoming more and more popular, and it's the kind of thing that is going to be taking over the future. Now, a plan of care is a written authorization plan for services approved by a healthcare practitioner, which specifies the type, frequency, and the providers for all both formal and informal care and services that are going to be required for the individual, and the cost, if any, of the long-term care services prescribed. So this is your blueprint here. And policies can be individual or group. Alternatives to long-term care insurance include life insurance with accelerated death benefits or riders, annuities, both immediate and deferred, home equity conversions or reverse mortgages, continuing care retirement communities. Veterans Administration has a good program as well. Self-insuring or personal assets. So this is your last resort, and it can take up your savings. Partially insured or bare bones long-term care insurance. I like to call it long-term care light. Then we have the short fat coverage, as it's called, which is a lower duration and raise the daily benefit amount to use the money to cover the latter. Then, as I mentioned, the hybrid policies, viatical settlements, where the existing life policy is sold as a percentage of the death benefit. The kids can pay for the long-term care insurance policy for the parents. There are associations, even with real estate agencies, you can get a group policy and get a discount from like 15% or so. This is also available to clubs, businesses, even families, churches, associations. And then through businesses, the 72T and Q distribution and the C Corp has retained earnings for it, and that's something that you can get into to figure out what it is. Even if you cannot buy long-term care insurance, you still have to have a plan for long-term care. You need a personal longevity plan, and the long-term care is expensive, but it's ensuring an expensive loss. Some of the ways to pay for long-term care insurance: reverse mortgages. There are some tax benefits on some of the uh, accounts like the health savings account, medical savings account, health reimbursement accounts, cafeteria plans, flexible spending accounts. You can buy an annuity that would be paying for long-term care insurance each year. Then there's trusts, which such as the CRT, the Charitable Remainder Trust, and medical disability trusts. Now, some states have a special type of long-term care insurance where select insurance carriers meet certain criteria with their policies. And if the people have them, they can have certain consumer asset protection features that protects them from Medicaid recovery. These special policies are called partnership policies. California has one of the first ones, in fact. Now, the Great Recession and the lingering economic turmoil, the interest rates have remained low for decades now, and the insurance companies invest their money to earn interest, which is used to pay out the claims. With the low interest rate environment, more people are going on claim and fewer policies are being sold. Insurance companies cannot make a profit. So more companies are exiting the long-term care insurance business, and many are raising premium substantially and reducing the benefits. The publicity of this is giving long-term care insurance a bad neighbor reputation. Insurance companies have a responsibility to their shareholders to make a profit, and they're required to have reserves, so they must meet these claims. So many cannot and are changing their ways to cope for it. Long-term care insurance is not for everybody, but many cannot buy it because of health reasons or they can't afford it. But like any other insurance, in the right situation, it can be a very valuable tool to protect the family and their assets. Remember, we must think differently about what living a long life means, and that includes all this planning. So this is the end of the presentation. Now there's a attachment that you got is from MetLife called the Essentials. This is kind of a long-term care for dummies type booklet. It hits all the highlights, and I think it'll be very valuable to you. And here's again is the Genworth annual cost of care. If you can't get this all down, you can also Google cost of care or Genworth cost of care, and you can see it. So here is my information. I thank you all for joining me today and learning about long-term care insurance, and I hope it's been helpful. If you need questions answered or have concerns, you can always contact me from this information, and we'll be doing it. So this concludes the recording now, if we can stop it.
All right, that's it for Skip's presentation on long-term care insurance. I hope you enjoyed watching it, or at least that you got some valuable and actionable information out of it. And again, if you need any information on long-term care insurance, or you want to actually get some long-term care insurance, by all means, I encourage you to contact Skip Frenzel, and his phone number is here at the bottom of the screen. All right, thank you so much for watching, and please stay tuned.